Thank you, Allison and Tara, for inviting me and the Nuclear Insurance Association of Canada to come today and talk to you a little bit about nuclear insurance. I must say that as a group, I think you're awfully brave to want to hear about insurance, as most people, when you're at a party, the last person wants to talk to you is someone who works in the insurance industry. But I can assure you that we find it very fascinating, and it's very even in the insurance industry, insuring nuclear peril is very unique and very niche. So we're always excited about what we do, and I'm hoping that you will find it so too. So when I was speaking to Tara and Allison and Ruth, they asked me to concentrate a little bit on the international flavor of insuring nuclear around the world. And so I said, okay, no problem with that. And maybe what I will do is give you a little bit of the Canadian context after that. So we're going to speak about insurance risk characteristics, both for home and auto as well as for nuclear, and see what the differences are. I'll mention the different nuclear conventions that are around the world, when they started, where they are. I'm going to do it at a very macro high level. There's a lot of technical work you can imagine on that, but we're not going to touch upon that today. But I'll just give you a bit of a flavor and a timeline of the major conventions around the world. And then the Canadian context, and then what I'd like to do is talk to you a little bit about nuclear insurance pools and what they are and how they operate. Okay, so the Nuclear Insurance Association of Canada, we have three main things that we like to do. We provide true risk transfer, we provide secure insurance capacity, and we collaborate with the world's nuclear experts to create innovative solutions for clients. And NIAC has had a 55-year history of working with partners around the world in order to do this. So we've been around for a long time. So first, what I'd like to talk about are insurance risk characteristics that we all face. And to use as an example, the home and auto insurance industry. As I was saying to Tara earlier, I have spent 3 years working with nuclear and 30 years in the property casualty insurance industry. So I have most of my expertise is in insurance, and I've dealt with this kind of insurance and commercial risks for a very long time. So, and at that level, we do talk about insurance risks and how do we go about insuring them. So the risk characteristics, let me just first explain that risk. What that is a chance of a loss, something that can happen. And we all deal with risk every day. When we decide to cross the street, when we decide to take on buying a home, when we drive a car, we're all assuming risk, and there's different things that we can do to manage that risk. So, but when you're dealing with a home and auto personal lines environment, as insurers, what you're really looking for and what you're interested in is the fact that the concept of the law of large numbers. That's a statistical concept, and it's something that the insurance industry uses, because when there's a lot of homes and a lot of cars, then you can start to predict what is going to happen. And so the claim frequency, like how many rear enders there are between, Mississauga Road and downtown Toronto, you can start to, once you've got a lot of automobiles over a long period of time, you can start to predict when it's sunny and warm how many accidents there's going to be, as opposed to when there's a snowfall or when there's a rainstorm. So so claims frequency is one of the major triggers in terms of trying to understand how much is it going to cost the industry and how much does the industry have to charge consumers in order to drive their car. The next risk factor has to do with severity. So when you're dealing with pricing, you have the two components, frequency and severity. And in the relative scheme of things, for personal home and auto, the severity is low. You know that if your house catches on fire, for us personally, it's devastating. That's why we carry insurance. But for the insurance industry, they know if you live, in my area at High Park and Bloor, you've probably got 2 bedrooms, 3 bedrooms, you've got 2 bathrooms, you've got 1 kitchen, and you can pretty much predict that even if you had a total loss fire, how much it was going to be. So the combination of knowing how many accidents and losses there's going to be and how expensive there are going to be, then you can figure out how much money you need to pay the losses. And basically that's what insurance companies try to do, particularly on property, is you want to drag in enough premium to pay the losses and make a little bit of money. Okay? And insurance companies like to make money, they don't deny it. So when you've got the law of large numbers and you've got frequency and severity, you can start to do analytics. And there's a lot of discussion both in insurance and outside of insurance about big data and analytics and postal codes. I mean, they can tell how many people in this area, whether you drive a red car, whether you like to eat Fig Newtons as opposed to Oreos. I mean, the analytics, when you've got your little Air Miles card and it tells you, every time you use it, they use all of those statistics. And in the insurance industry is no different. They can predict like homeowners who are going to have a loss, even when they haven't had a loss in 17 years and they've insured with you forever, but the numbers come up and it says you're going to have a loss. So it's kind of interesting how the industry has been able to take that information and use it for their benefit, but also for the benefit of public. Low limits relatively is another factor. I mean, you probably have $1 million worth of liability coverage on your homeowners. You probably have $2 million liability on your automobile. If I were a broker, I would recommend that you get $5 million because it's very cheap and it's worthwhile having. And if you've got teenagers, I definitely recommend that you increase your limits because they do things in packs, and so definitely for an extra $100 a year. So that's my broker pitch, but I'm not a broker anymore. But the point being is that relatively speaking, the limits that anyone takes in your home and auto are actually very low. And the last characteristic I'd like to talk about is capacity. So insurance companies, like when we decide we want to transfer our risk, we go to an insurance company and get an insurance policy. What insurance companies do to transfer their risk and share their risk is they go to their insurance company, which are called reinsurers. Okay, so in this term, what happens is that insurance companies, when they're worried about maybe having like a big ice storm like we had back in '99, they would insure to a certain level, and then if the losses became so severe, then their insurance companies would help pay for that. And so that capacity is reinsured and shared among the industry. So those are in a very basic level the insurance characteristics that you and I face for our home and for our auto. Okay. So what I like to do is sort of compare those insurance characteristics with the nuclear. And I'm often asked, well, nuclear insurance, it's just the same as any insurance. It's a commodity. When you look at homeowners and personal lines business, I could see where people would say that it's a bit of a commodity because of the law of large numbers, because of the predictability. But when you take a look at nuclear insurance, instead of the law of large numbers, there's actually very small numbers of risks of the nuclear operators. Around the world, there's probably less than 400. So the numbers aren't there. The claims frequency is very unpredictable. There's so few of them. The technology's been around for like 60 odd years. It hasn't been a very long time. So that statistical combination of not very many and not over a very long time doesn't allow for the same level of predictability. The other area is in terms of severity. Rather than being low severity, it is extremely high severity if there was a loss. I mean, we only have to take a look at Fukushima and how much the costs of that have escalated over the last 4 years. So so the severity of a loss, the potential severity of a loss is absolutely like enormous, catastrophic. That's how we define it, right? As an account, I would say that an operator is not only can you not use analytics, but it is the quintessential risk managed account. You tailor what the client's needs are based on their operations specifically. So we've got a survey going on right now in Pickering this week, and we've got 5 engineers there. One of them's from France, one of them's from the UK. We've got a couple here from Canada, and the reason why we do that is because we want to manage their account and understand their account so that we can meet their needs. So it's very, very specific. Regarding limits, the limits are exceptionally high. Where our limits might be a $2 million liability, we now, with the new legislation, are going up to $1 billion. Those limits are big. And capacity. The difference in capacity is because it's so big and so severe, and I'll go into a little bit more detail later on, is that the capacity is net. It is not reinsured. When you're insuring nuclear, you have to make sure that the fund, if in the event of a loss, you have to make sure that the funds will be there and available. Okay? So that's a very, very high-level overview of insurance risk characteristics and the difference between our kind of insurance and nuclear insurance. So as I was saying that I've been in insurance for a long time, but not so much in nuclear. And when I first joined nuclear, I had to try to understand some of the acronyms and some of the things that go on in the nuclear industry. And but believe me, the insurance industry has their own, so it's just a question of learning what they are. But I had a stepdad, and he lived his whole life in Scotland, and he had a very thick accent, and so it was sometimes very difficult to hear him. You'd have to listen to him a little bit because he'd talk really, really fast, and he'd contract his words, and he'd have expressions which were just not familiar to us here in Canada. And one of his expressions was, and I'll say it slowly because I can't say it as fast as he said it, "You're a fool if you don't know what I found out 5 minutes ago." Okay, so what I'm going to do is give you a very brief overview of the major insurance conventions. And I've prefaced it in a way because this is how I helped piece it together for myself so that I could understand the different conventions and the different acronyms. And I hope that it'll give you a good introduction into the major nuclear conventions that exist right now. So from the start, the nuclear insurance pools, they have worked closely with the governments and government agencies responsible for nuclear liability conventions. So what I want to do is just talk about these 5 conventions, and I want to talk to you in terms of timeline and why they were put together, talk a little bit about history in general and geography and sustainability. So the first convention I'd like to speak to is the Price-Anderson Act. This is the United States, and they came up with this act in 1957. And Price-Anderson, Anderson I think was a senator and Price was somebody else, and they prepositioned this act. But think about it. I mean, this would have been about 10 years after World War II. And nuclear was used for, as we know, the bomb. But there was this understanding that nuclear power could be used for harnessing energy and that there was a commercial value to that. But in order to be able to do that, there was going to have to be certain controls in place because, as we mentioned, in terms of the insurance characteristics, the severity is so high. So what they came up with was this Price-Anderson Act, which allowed non-military nuclear facilities in the U.S. to be able to operate. They made it so that the operators were responsible, but they also said you're going to have to fund this there's going to be a capping of a certain limit, so that everyone can get their head around it. And the other thing they said was, to the extent that you can get insurance, you have to get insurance, as much insurance as you can get. And then after that, you have to create a fund. So this act, even though it was in 1957, it was reviewed and renewed in 2005. And it's good for another 20 years. So this act is still in place, and it's still working right now. In terms of the limit cap of the Price-Anderson Act and what operators are responsible for, I was talking to a broker this morning from New York, and he was telling me that it's around $13 billion. The maximum insurance right now in the American pool is $375 million. So you start to get an idea that when I say like the numbers, the limits are high, the severity is high, and the limits respond to that. Okay, so that's the Price-Anderson. We're not going to talk too much more about that because they have their own little thing, and then there's the rest of the world. Okay, which is typically American, isn't it? Okay, so the next convention is the Paris Convention. And it was started by the Organization of Economic Cooperation and Development. And I have to read that because we always just call it the OECD. Okay, the OECD was started up, and it applied at the time. They came up with an agency. This was around the 60s, just a little bit after the Price-Anderson, and they came up with an agency called the Nuclear Energy Agency, and what we refer to as the NEA. So the OECD and the NEA is like the little subset of the OECD. Okay, it was put together and it was ratified in 1967. So it took 7 years for them to figure out what they wanted to do and then get everybody on board. Because you have to remember that these are all government agencies and governments. And so in order to talk about it and get it sorted out, get it approved and get it ratified, it takes a long time. So you got to have patience when you're dealing with nuclear insurance. The OECD and the NEA particularly was mostly Western European countries. And again, think about it, post-World War II, they wanted to make sure that they had the economic development. How would they be able to do this? If they were building a nuclear power plant, these things don't get built in like a couple of days or a couple of months. It takes years to do, so it's lagging that way. That's why it's into the 60s. But also the suppliers were saying, like, unless you put some controls in this, we're not going to be able to do work for you, because how are we ever going to be able to make sure that there's enough insurance around if something were to happen? So we're starting to think about how as countries operate, but then how the actual power plants and the suppliers of the operators would actually work and be able to provide the nuclear liability protection for the public. Okay. Today, the NEA still exists. There are about 31 countries that are involved in the NEA. They are used mostly as an internal cooperation and a center of excellence for technical expertise. And the NEA specific for nuclear energy. So you'll see newer things are talking about refurbishment, because 40 years ago, no one was really interested in refurbishment. Now everyone's interested in refurbishment. So what is of interest and what is of value to be working on and making sure that everything is as comprehensive as it can be is very dynamic. It's not the same old, like what happened, even though the agency itself might be 60 years old, what they're doing and what they're talking about is very current, is very valuable. Okay? So that's the Paris Convention. Canada kind of follows the Paris Convention, although we're not party to the Paris Convention because it applies to like Western European countries. Okay. The next convention is the Vienna Convention. And it started a little bit later than the Paris Convention. It started around 1963 and was ratified in 1977. So again, takes a long time. It was started by the United Nations. And so the OECD is the Paris Convention, United Nations is the Vienna Convention, and the agency responsible for handling the nuclear, instead of it being the NEA, is the IAEA, the International Atomic Energy Agency. Okay? So who applies to that is mostly Eastern European countries. So it kind of makes sense, right? I mean, if you've got a group here that's Western, and you're not Western and you're not part of this group, it's like, what are we going to do? We got to do something. So the Vienna Convention was created for everybody else. Okay? And so it was mostly Eastern European countries that were not part of the Paris Convention, but over the years, that too has also expanded. Okay? So the next one, on top of the Paris and Vienna, is called the Joint Protocol. And believe me, there are more, you know, and a lot more specific than what I'm going into, but I'm just trying to give you a flavor of the major ones. So back in 1988, they came up with the Joint Protocol. And what that did was link the Paris Convention and the Vienna Convention. It increased the limits, but it helped to, and expanded it. But the reason for the link was why? Anyone can guess?
The end of the Cold War.
Good guess. And any other ideas? Not quite, no. The reason for it was Chernobyl. So they had the incident, and then suddenly they realized, well, I mean, think of the geography of Europe, right? I mean, I used to be a territory manager for personal lines, and I used to do northwestern Ontario and northern Ontario and part of eastern Ontario. So I was driving all the time. And they used to say to me, oh, you know, your territory is the same size as Europe. And I go, yeah, but I'm having to go to Timmins and Kapuskasing. I wish I was going to Paris and Vienna. So, you know, in terms of size, you can imagine that, you know, if you weren't in the Paris Convention and something happened there, like, where are you? And vice versa, right? So it dawned on everyone back in 1988, hey, we better figure out how we can coordinate and collaborate and work together. So the Joint Protocol was started then, okay? And that leads us to the last one, which is the CSC, or what we call the Convention on Supplementary Compensation. And I've put it over all of them because it was introduced in 1997, and entry into force was this year. It just got announced in June, wasn't it, Colleen? April, okay. So what that does is it kind of takes the joint protocol kind of concept that happened over Paris and Vienna over all the various conventions. And so they were trying to get it ratified. In order to ratify, they needed to have at least 5 countries. They needed to have at least a certain amount of power that was being generated by these countries. And so they were trying to get various ones signed on. And so what happened was they got Japan in the spring, was the one that gave them the critical mass in order to be ratified. Okay. So, and the reason for the reason why the CSC I think is so important is because our community now is so global that we've got to be able to make sure that we can relate to no matter where the risks are, right? And also for sustainability, okay? So as time goes on and the limits are increasing, so we need to stretch out more in terms of being able to respond, both government agencies, global insurance, and also the various partners that are involved in the nuclear industry. So it all sort of matches and makes sense, okay? The purpose of the nuclear conventions are twofold. One is to provide adequate compensation to the public and also to ensure the economic growth of the nuclear industry. If you don't have insurance, you can't grow your business because you're too vulnerable, right? And that applies to any sort of commercial insurance enterprise, right? It would be devastating. But you can, you know, we're all in the nuclear industry now. We all can figure out how devastating it would be if we didn't have insurance to cover the potential for the loss. Right. Now what I'd like to talk briefly about are the 7 principles common in all of these nuclear conventions, whether you're dealing with the CSC or the Paris Convention or the Vienna Convention. All of the, and even the Price-Anderson Act, all of them have more or less these 7 common principles with respect to nuclear. The first one is that nuclear liability is channeled exclusively to the operator. That means that if there is a release, where would the public go? Instead of having to go and try to figure out, was it the part from this supplier, or was it this operating, or was it this facility, that it's too much in the event, if an incident ever happened, it would be too much to have to figure all that out. So the channeling is to one spot, like a one-shot stop, and it would be channeled to the operator. The second principle is that the nuclear liability is absolute for the operator. Now, we have this a little bit in our automobile insurance in Ontario, where we have a no-fault system, where it doesn't matter, when it says no fault, it doesn't mean that someone isn't at fault. It could be someone at fault, but what it's saying is that we're not going to spend any time trying to figure out who's at fault. It's just going to be the operator. Okay. And this helps in terms of suppliers to the nuclear energy industry. If they're dealing with operators, then they know that the liability is being channeled into the operator, and that and the public knows they don't have to try and prove that somebody was negligent. If an incident happens, there's a responsibility there. And so those 2 are the biggies in terms of the common principles, the exclusivity, or rather the exclusivity and the absolute liability for operators. The third common principle is that there has to be a limited amount. Now, the limit's going to be high, and the limit is high, but there has to be a ceiling. There isn't an actuary in the world that can factor in something when it's to infinity, and so no one would be able to afford it. Okay, so and no insurer would be able to insure a risk where the liability exposure was infinite. Okay. The third one is that the liability has to be limited in time. So we all know that there's, if there is an incident, that there would be very likely inherent injuries, and it could manifest itself like years later. So although the time could be quite long, and we'll talk about what's happening in Canada with the new legislation, but there has to be some sort of certainty on what that would be. Again, it's like limits, but it's also the time. It creates a box for people to figure out, well, what's it going to be and how we're going to be able to charge for it. The operators must maintain financial security. This is in our act, and it's in the Price-Anderson Act, that operators must carry insurance. Okay, that's one of the principles. And the last 2 are that the exclusivity in territory. So that means if an incident were to happen here in Canada, that any suits, any claimants coming would come here in Canada and get in line for compensation. So there wouldn't be, I don't think there'd be a class action suit, but if there was a class action suit, it would have to be here in Canada. There wouldn't be one in the United States. And vice versa. If the incident happened in Romania, then the jurisdiction of Romania would apply. Okay, so that's where the jurisdiction of any action and how that would, so the government of the place where the incident occurred is the exclusive territory for managing that incident. Okay, and the last one is that there's no discrimination for victims of an incident. So there isn't a pecking order that, well, you lived in Canada, so you get first dibs. I mean, if someone had a loss and they were from the United States, they would have to claim here in Canada, but they would have just as much of a right to claim as a Canadian. Okay, and that, you can imagine, is pretty important in Europe, right? Because it depends like how the wind goes. I mean, you don't want to say, oh, you're in Poland, you get it. You're in Germany, you don't get it. I mean, it would be completely untenable, right? For us here in Canada, we've got our United States below us and them above us, but in Europe and in Japan, we're not really worried too much about the effects. Although, with Fukushima, there's a lot of public fear about radiation and the effects in terms of, the agriculture, in terms of coming over in the ocean. So just because the geography is far away doesn't mean that there isn't a fear and testing that needs to be done. Okay. So let's talk a little bit about Canada and how this relates. This comes from the federal government, not from me, but Canada's nuclear industry, $5 billion in electricity annually, $1 billion worth of uranium exports annually, and through 30,000 jobs across Canada related to the nuclear industry. So it's very important to Canada, not just here in Ontario where we have the major operations, but it's important for our overall economy. It's also very important in Saskatchewan, which has the second largest uranium mines in the world. Okay. In 2013, December, Canada signed the CSC. So that little green box that I had a couple slides ago? So we signed it. And what we wanted to do is, in order to be on that team, we had to comply with the requirements of the CSC, and we're almost there. Okay, so that is why the federal government wanted to make sure that we complied so that we could be party to the CSC, and they came up with the Bill C-22, which they call the Energy Safety and Security Act. This was an omnibus bill. It also applies to oil and gas. So there's a part in there that refers to nuclear. There's also a part that refers to oil and gas. So I won't talk about all of it. We'll just relate it to the NLCA. Right now, the federal government has an act called the NLA, the Nuclear Liability Act, and it will be replaced by the Nuclear Liability and Compensation Act. The bill was introduced in 2014. The legislation for the NLCA was passed in June this year. And we don't know when the entry into force is going to be. We'll probably find out after October 19th. But we do anticipate that the act will get entry into force in 2016. Okay, so when you take a look at this and you think, how long did it take for the Vienna and the various conventions to ratify? I mean, this is lightning speed, right, in terms of bringing this up to date. So Colleen's laughing at me. It took them 10 years to get to lightning speed, but since 2013, a lot of work has been done in order to get the NLCA up and running. So I'd like to talk a little bit now about the NLCA and what are the major changes. The first change is the limits of liability. Right now, the NLA, which has been in place since 1976, and back then the limit was $75 million. And so we've known for a long, long time that $75 million is wholly inadequate. Okay, so with the passing of the NLCA bill, we will now have $1 billion worth of capacity required for an operator. Okay. The prescription period right now for it's 10 years, and it's going to be going to 30 years. So that means the public who wants to present a claim, they would have 30 years in order to present that claim. Okay, compared to your homeowners, which I think is 2 years, 12 months to 2 years. Just give you an idea of the window of time. broader range of coverage of what an operator is responsible for is also written into the NLCA. For example, trauma, psychological trauma, when associated with a bodily injury. I mean, that's pretty standard now in a general liability if you had a bodily injury claim. So that is now written in, so that would also apply for nuclear liability. The other thing the Act did was it did some housekeeping. So where the language was maybe a little bit ambiguous, it was just a great opportunity to make sure that it was consistent and clear, not only for Canadian law, but also internationally as well. So that was a big thing. And then the other aspect of the NLCA is that operators have the flexibility of covering this billion-dollar limit of liability, that there is alternative financing that they can do as opposed to transfer of risk insurance up to 50% of that limit. So those are the major changes of the NLCA. Yes?
The $1 billion, is that associated with the specific output? Because there are different sites with different numbers of reactors. Is it per site or for output?
That's a great question, because the CNSC, when they're issuing a license, they will issue what the liability is required. Okay, when the NLA was in place at 75 million, everybody had 75 million, whether they needed it or not, right? But some of them are small, like McMaster University versus, Bruce Power. You really can't compare them, right? So an operator such as Bruce Power or OPG will need the $1 billion, and their license would be issued by the CNSC for that. But the NLCA has also given the CNSC the right to be able to specify what limit if it needs to be a smaller limit. Okay? But that's a great question.
My background is human health, so I'm interested in the period extended from 10 to 30 years.
Yes.
I wonder does that take into account data up to Chernobyl, or does that also consider Fukushima information?
When they were looking at the Act, whether just how much time would it take for an injury to manifest, and so it's in keeping with what other parts of the world are also doing, and 30 years is much longer than what we had at 10, so that's what's been written into. One of the interesting things about the NLCA is when they wrote it, they put in the Act that it must be reviewed every 5 years, right? So which is great, because the NLA was 1976, and in 2015, it's quite a long time. So now with an automatic review required every 5 years, these things like, is 30 years enough? On an international scale, it gives them an opportunity to be able to review that, as well as the limits. Was, like Colleen and I speculate that, in 5 years' time, the $1 billion limit will be even higher than $1 billion, right? Okay. So, how do insurance pools work for nuclear? While governments created the appropriate regulatory policies with the conventions to govern nuclear energy technology, insurers were working to develop and organized to be able to respond to those needs. Okay, and how they did that was they did that by forming insurance pools. The one thing about the pool, when we were talking about the characteristics where they need a really large amount, and the capacity needs to be really, really secure because of public victims. So there's a large capacity required by insurance companies, and so what we want to do is we pool a bunch of them together to commit a little bit to make that big amount. Because any one insurance company, like if I totaled my car tonight, my insurance company wouldn't be too happy, but they could suffer the loss, no big deal, okay? If I was an insurance company and I insured all by myself an operator and I had $1 billion limit, I'd be out of business, right? So in terms of being able to manage the financial security of what's going to be required, it's better to have a number of insurance companies come together and put their money together so that if there were a loss, that they would be secure enough that they wouldn't go out of business, that they would be able to go on like, the next day. And it's that kind of security that not only helps operators and suppliers have the security that they can do their business for the economic opportunity, but also the public in terms of, the fear and making sure that, we're going to do everything we can in the industry to make sure a loss never happens. But if it does, here in Canada, we do have a mechanism in place to be able to compensate victims. Okay. So what it does do, if there's more than one insurance company, it helps spread the risk, right? So when we were comparing before personal home and auto, there was a spread of risk because of the law of large numbers. We don't have that in nuclear. So in order to spread the risk, we have a lot of insurance companies, and that's where the spread comes from. Okay. We also ask when those insurance companies come together to pool their money, is that they pool the money that they can afford to lose. That's their net amount. Okay. And I want to give you like a little example that happened to me like about just over 10 years ago. I went to London for the first time, to London, England. And I was in the insurance industry, so of course, the one thing I wanted to do is I wanted to go see Lloyd's of London, because anybody's insurance wants to go to Lloyd's of London. Exactly, it's the Mecca. So I was invited to go on a tour of Lloyd's, and you go into the financial district, and the building there is very modern, very new. And I don't know if you've ever had a chance to see what Lloyd's of London looks like on the outside, but when they built it so that the elevator and all of the wiring of the building is on the outside. Looks like a tube conduit. And they did that for a number of reasons. One was they thought if they had to build, they could build like Lego, right? They could just take the roof off, put another thing on top, and just build up. That was one reason. But when they built it, they had an architect, and then a couple of years later, so I'm going up and he's like, see this, it's starting to rust on the outside, because the elevator is on the outside when you go up to the top floor. So you kind of look like the Jetsons going up in the elevator. But you could see that for a relatively new building, it was looking like a little worse for wear. And the guy says, yeah, well, we could sue the architect, but guess what? Insured with Lloyd's. So that's why, and I use that example to explain why it's important to make sure that there's a net limit. You want to avoid spirals. You can't be insuring it twice. You can't be insuring yourself. So when we want a large group of people and we want to put a little bit of money in, we have to make sure that their money, it's like Remoli, everybody puts some money in and there's a pot there to pay. Okay? And so we've got a pool for there's about 26, yes?
I noticed that in the pooling system, there is more than $2 billion in there.
Yeah.
So you can invest this money to get mobile loan, but is there a difference between investing the money in the nuclear industry, in the nuclear insurance, comparing with the car industry, because they have accidents so frequently, but in nuclear, we don't have that money. And the last accident could be really long time ago. Like we had a 3 Mile Island in the 70s, 80s, we got a Chernobyl, and then 20 years we have nothing.
Right.
And then we have Fukushima.
Right.
So the next one could be really, really long. How are you, is there a difference between the U.S. policy?
Most insurance companies, depending on where they operate, they do have, quite apart from the nuclear regulations, they have like OSFI, the Office of Superintendent of Financial institutions is what we have here in Canada, but every country has like their own kind of regulatory. So an insurance company, when they set up to write insurance, whether it's nuclear insurance or whether it's home and auto or whether it's commercial insurance, have requirements in terms of what they, what kind of capacity they can do of their own, which is net, how much they can reinsure, how much they can actually insure to make sure that there's enough security there. So you're right. I mean, you could have an insurance company who not only insures nuclear risk, but they also insure other commercial risks, non-nuclear risks, and they do. I mean, nuclear in terms of the overall operation of an insurance company is very small. It is a niche. It's the quintessential niche market. Okay. And so when I say there's an insurance pool like NIAC, but there's also an insurance pool in the UK. There's an insurance pool in Romania and Slovakia. I mean, there's about 26 insurance pools. Okay, and together they help to make sure that there's enough money to pay losses. So the pool also provides a concentration of specialized expertise in underwriting, risk control, and claims handling. You all know, working in the nuclear industry, just how scientific and how complicated and how much expertise is required, right? Underwriting those risks are exactly the same. So we have about 17 insurance companies in our Canadian pool right now. All 17 companies couldn't justify having a department, like they have a personal lines department, they can't justify having a nuclear insurance department. So what the pool does is we act as the insurance department, the underwriting department for nuclear for all of our pool members. Okay. Right. And we're highly specialized. We are. Yeah, we are. So the pooling system, there's more than 20 pools. I think it's around 26 right now. There's about $2 billion worth of capacity. Your question about capacity is not just, the pools insure not only liability, but they also insure property, the property of the nuclear operators. And so having high limits to be able to insure those values, that's the limit that's around right now. And the international pooling system insures about 70% of the reactors around the world. So you might ask, well, where's the other 30%? Price Anderson in the United States. The types of insurance coverage that are available for nuclear insurance is nuclear liability, obviously, property for operators, course of construction, machinery breakdown, business interruption. Now these are typical kinds of coverages that are available on commercial risk, but this is for the nuclear peril. It's not for the non-conventional, which your regular insurance company and regular market would be insuring those. Okay. So a little bit about NIAC's pool. We only insure the nuclear peril risk that's here in Canada. We're a domestic pool. We do not reinsure our capacity with any of the other pools around the world. It's kind of unique that way because most of the other pools do reinsure with others, but we do not. Okay, and part of the reason for that was a long, long time ago when NIAC was originating. Most of the companies were U.S. companies and British companies, and so in order to not have spirals, that we just said, okay, well, we're just going to insure Canadian risks and we won't insure elsewhere. Okay. NIAC members are made up of property casualty insurers and reinsurers that are licensed by OSFI here in Canada. So OSFI, I don't know if you've read like in the paper, but with the financial crisis of 2008, one of the reasons why Canada came through that so well was that we have very, very strict regulatory controls. Okay. And NIAC co-insures with the British pool, which is the nuclear risk insurers. So there is a pool in the UK. They do reinsure with other pools, and so if we need more capacity, and we do, with this $1 billion limit coming up, we cannot, in Canada, we cannot come up with $1 billion worth of coverage on our own. So we co-insure with nuclear risk insurers, and between the two of us, and NIAC and NRI, we can underwrite the full $1 billion worth of limit of liability that's going to be required by the NLCA. And that's the end of my presentation.